Okay, so this video is to just go through 3.6 very quickly. Just remember that's an error of original entry. Once you see it's a journal, daybook, or the source document itself, that will kind of alert you to the fact that this is an error of original entry. And what you have to do, it is the incorrect amount, meaning that the error, they either understated the amount, put the amount incorrectly as less than it should have been, or overstated the amount or put the amount more than it is supposed to be, the correct amount. So what happens is if it is understated or less, that means you have to add it, right? It means that you had it less. So to get it to the correct amount, you have to add. How do you do that? You have to put it on the same side as the original entry. So that is why you're going to have to identify. So for example, if the original entry was credit sales, and instead of crediting sales $100, you credited sales $10, which is less, you're going to have to add the $90 to make it 100. Sales is a credit account, and therefore you're going to credit. So once you identify that the incorrect amount is less, you just enter it on the same side as the original entry, or the account that you made the error in, you add it on the same side. So if you had credited that account, you're going to credit with the error, the difference, to bring it up. So we're going to see that just now. And in terms of if it is more, that means it is overstated. You need to minus or subtract. And to minus and subtract in accounts, in T accounts, means you go to the opposite side. So if the account was credited, you will go on the debit side to take out the difference, right? So sale of goods worth $564 to T. Thomas, incorrectly recorded in the sales journal. So you see here, sales journal, which means it is an error of original entry. So what I do, I identify, this is after putting my little Alice list, I identify the transaction, which is sale of goods to T. Thomas. Sales will be a credit, T. Thomas would be a debit. And what is the correct transaction? 564. So this was supposed to be my correct entry. Instead, I entered it as 546, which means 546, I compare it, it is less than, which means I will still go and credit my sales account with the difference, because how much less was it? It was understated by $18. So I will go and I will credit my sales account and debit T. Thomas. So T. Thomas, debit $18, sales, credit $18. And you're just going to do that for each transaction. If it is more, so we have purchase of goods worth $145 to M. Matthews. This is your correct transaction. So that will be purchases, M. Matthews. Purchases would be a debit as it's an expense. M. Matthews will be a credit. And therefore, we will, or the correct amount, 145. So we compare the incorrect amount. It is more this time. So what you're going to do, the account that was debited, you're going to credit, and the account that was credited, you're going to debit. So in other words, you're going to flip the transactions to correct the error. Once overstated, once again, you will do the opposite of what the transaction is. So because we had debited purchases, we are now going to credit purchases, and we're going to debit M. Matthews. So debit M. Matthews, the difference is $9, and you're going to credit purchases with $9. And this is to correct overstatement, and you can say overstatement by $9. So without further delay, we are going to go into 3.6, and this is what you were supposed to do. We can just do the first one. Sales to Mr. Anderson of $560. So this is the correct transaction. What are the two accounts? You see, remember to put this there. Sales, Mr. Anderson. Sales is a credit. Mr. Anderson will be the debit. Sales always credit. And the correct amount, $560. So this is your correct entry, double entry. The incorrect amount that was entered, $650. You compare it and it is more. More by how much? $90. Once it is more, remember what we do? Do we put it on the same side? No. We're going to have to put it on the opposite sides because we need to subtract or take out that extra $90. Once again, in accounts, to take out an amount, you go to the opposite side of the entry. So going to your journal, that means because sales is a credit, you're going to debit sales, $90, and Mr. Anderson, that was supposed to have been debited, $560, it was overstated, so we're going to take out that difference, credit $90. And as I said, your narratives, if required, you can just put the correct amount overstated by $90. Nice. So let's go back. The other one, a credit sale of $150 was credited in the sales day book. Very important. Sales day book, sales journal. So once again, this is an error of original entry. Now, what are the accounts whenever you have an entry in the sales journal? Remember, the transactions that go into your sales journal are credit sales. Look, they said it here. So your account would be sale, but because it was a credit sale, that means you have somebody that owes you. What is that person called? It is an accounts or trade receivable. Remember, previously known or referred to more popularly as debtor. So they did not state the name of the debtor, but that is the next account if they had given it to you. So what we are going to just have to do is just have it represented by receivable. Just note that every time you see a sales journal or sales invoice, an error in the sales journal or sales invoice, these are the two accounts you will have to correct because these are the related or the relevant accounts. So that will be explained more again when you see it, just to clarify, emphasize. So sales is always a credit, the accounts receivable as an asset is a debit, and the correct amount was $150. So this is the correct entry. The wrong entry was $130. So that is less than the $150, which means it was understated by $20. So you're going to stay on the same side. So here we go, the same side, you debit your accounts receivable, you credit your sales, $20, and that would be to correct the understated amount by $20. So you correct it and you move on to the next one. Note once again, and you can just look at it. I also put it up on the classroom. This is the explanation for that, those that were there. Once again, emphasizing, once you see that the error was made in the sales journal or sales invoice, that means that the accounts that the errors were made in would always be sales and the accounts receivable. If they give you the accounts receivable name, that is what you enter here. But if they do not give you the personal name, you will just represent it with accounts receivable. All right, always. So just be alerted to that. So the next one, paid electricity 81, cash entered as 61 in the cash book. All right, so That means that the two accounts in the transaction would be electricity, and they didn't state whether it was cash or bank. Yes, they did. There it is, cash. So you have your two transactions, your two accounts, which means electricity is an expense, your debits, cash is credits because it was payment, and the correct amount was $81. So correct transaction, the wrong amount, 61, is less than, so you're still going to debit electricity and credit the cash account with the $20 different. So simply go and you put it there, and that is your answer. Next one, the amount paid for insurance, $240 by check. So the accounts insurance check, which is bank, always represented by bank. Insurance is an expense, so you're debiting payment, bank, credit, right amount or correct amount, $240. So which means that this is your transaction. Incorrect amount, $420, is more than, it is more than $180. So what does that mean? You go to the opposite sides. All right. So insurance would have been debited. So you're going to go and credit insurance instead and debit bank. So you saw that bank was credited. So because it's an overstatement, you're going to debit bank with the $180. And since insurance had been debited, you're going to credit insurance because it was overstated. You need to subtract by the $180. And that is to correct the overstated amount. The last one, a lot of words, but you see this one that we just explained, it is the reverse for this. What do we see here? We see purchases invoice and we see purchases journal. Just like when you see sales invoice and sales journal, the two accounts are known one time, it's sales and accounts receivable. Most people got the one account. You see purchases invoice, purchases journal, the account is obviously purchases. But what is the next account? It will be accounts payable. And just like we saw with the B, this one, if they give you the name of the payable, that is the account you enter. But if they do not give you the name, like they have not mentioned who the accounts payable is here, you will just put the accounts payable or trade payable or payable. So let's now that we know the two accounts in the transaction, purchases, expense, debit, accounts payable, liability, credit, which is the correct amount, $320. So we know our correct entry. Now we're going to look at the incorrect amount, which is $220. Compared to the $320, it is less, so understated by how much? 100. And what we said, when it is less, you just go and do the same thing. There's no flipping, right? There is just go and debit your purchases account with the difference 100 and credit your accounts payable with the 100 to correct amount overstated by 100. So just to emphasize again, once you see purchases invoice or purchases journal, the accounts to be corrected, purchases and accounts payable with the name of the personal payable account if they have given it to you. So this here, you can just look at, these are your answers. These are the two special notes for these two type of transactions. You might see this coming up in the exam, just like this. Now you know what to do. Okay, always remember sales invoice, sales journal. The two accounts involved will be sales and receivables. And then for the purchases invoice and purchases journal, the two accounts would be purchases and payables. I said that right? Hope so. Correct me in your head if anything. You can take your notes, and this is the solution.